Welcome back to another episode of the Heat Your Home Energy Show. And today I am joined by Mike Lindsay-Bayley from Perenna. Mike is the sustainability lead at Perenna, and today we're going to be talking about a slightly different topic to the normal heat pump rhetoric that we talk about on this show. We're going to be talking about mortgages and specifically how mortgages can help people move through that journey of sustainability. So welcome to the show, Mike.
Thanks very much, Simon. Pleasure to be here.
You've come from London today.
I've come up from London. Yeah.
Welcome to the north.
Yeah, thank you. It's good to be here.
Brought the sunshine with you as well.
Yeah, it's actually warmer here than it was down there. So yeah.
And you've come on a very busy weekend for Liverpool. So you've come on the Aintree weekend, and Liverpool are playing Atalanta tonight. So Liverpool is bustling, but thankfully we got you here on time. So do you want to start a little bit just talking through who you are? Obviously, we're going to get into Perenna and what they're doing in the market. But who is Mike Lindsay-Bayley?
So I am, I guess professionally, I'm not going to talk you through my whole personal life, but so I actually started off as an accountant. So trained as an accountant with PwC for 3 years.
Oh, wow. Okay.
So that's probably where I picked up a lot of my kind of Excel and modeling skills, which is what I've focused on in previous roles, and moved into reinsurance, which is again completely new world. Did that for about 3 years, again financial modeling background, and then during the pandemic, 2020, so I was living abroad. I moved back to the UK and was looking for jobs, and an opportunity came up for this new startup bank that was not yet a bank. It was about to apply for its banking license. I knew nothing about mortgages. Mortgages was a whole new industry to step into, but I really liked the founder's vision of what the bank could become, and so I joined to aid them with some modeling skills for helping them out with the application. And then, the last 4 years have kind of flown by, and my roles changed quite drastically over that period. Kind of moving from capital modeling, sitting with Excel models, and now really trying to push a green and sustainability agenda within the bank, and the kind of the focus of that is around decarbonizing homes and retrofit.
That's
so
crazy.
That's the journey.
I always think that, especially coming from a finance background, that's what you went into from university? Was it?
Yeah, I studied finance and accounting at university.
Because typically that's quite a risk-averse type of industry. So to go to help see this opportunity in a new startup bank and take it, that must have been red flags all over the place for you, surely.
Yeah, I think.
Or typically for people who are in the accountancy.
So going from a big organization like PwC, my next role was actually at a smaller company. It was a 10-person office. And so I really liked working on a smaller team, and really knowing everyone there, and really feeling like my work was valued. So that was something I was looking for sure. Was and to join another smaller company, sitting in the office with your co-founders, with the founders. There's no better way to kind of learn a new industry than having that kind of FaceTime. So we're not 10 people anymore. We're almost 100. So it's been a lot of growth at Perenna in that time.
But, really short time as well. That's incredible. So tell us about Perenna. I mean, this is from our perspective and doing some work with Perenna, the things you guys are doing in the UK are groundbreaking. So just for the audience, what is Perenna's? Where did Perenna start? What's the journey it's going on? What's unique about Perenna in comparison to, say, other mortgage lenders in the UK?
Yeah, so Perenna was an idea that was concocted by the founders, not out of anything kind of novel or unique, but more looking at the way the mortgage market works in other countries. And in nearly every other developed nation, there is an option out there for customers, for people buying homes, to have a long-term fixed rate mortgage. And what the founders saw in the UK was a market that was basically the only options out there for homeowners were short-term teaser rates. So you could fix your mortgage for 2 years or for 5 years, but 5 years was considered the longest that you would fix for. And what they saw was that actually that's putting a lot of risk on customers, because you're forcing them into a specific date where they're going to have to refinance. Otherwise, they get put on this SVR, which is a lot higher than what the kind of initial rate would have been. And if a customer, for whatever reason, can't refinance, or if interest rates in general have gone up massively since they last fixed, you enter a situation where your payments could double. And they saw that this risk was out there. We had about 15 years of really low interest rate environment following the financial crisis. And so everyone who's been refinancing every 2 years hasn't really noticed the risk that they were taking on. But now we've seen in the last 2 years, the interest rates have gone up. The Bank of England base rate's gone up from 0.25% to over 5%. And everyone who's been remortgaging in the last 2 years has seen massive increases. And it's a risk that was always there, that I don't think many people really kind of knew that they were shouldering. But obviously prior to the last 2 years, the founders, they knew that this risk was there. And when you look at other countries, nearly every other mortgage market has the option of long-term fixed rate mortgages where the customer's mortgage rate will never go up. So you're protected for the long term. And what they wanted was to bring that to the UK, just to give that added security for customers who want that. And it's, some people will want to, roll the dice every 2 years and keep refinancing and hope that rates come lower. But there's a whole section of homeowners who just don't want to worry about their mortgage rate. And, knowing that, if you fix today and your payment's £1,000 a month, it will never be more than £1,000 a month for the next 30 years with a Perenna mortgage. And I think that's the kind of security that some people are after. And that's what we're
100%.
able to offer, which other banks haven't done in the UK to date.
Well, and that's really strange. So I guess if you're not aware outside of the UK, and I have to admit, before I came across Perenna, I was probably a little bit naive to it myself. That I didn't know the way the rest of the developed nations operate. And we're talking countries in Europe. People can have these long-term fixed rate mortgages, but I guess in the UK, because they've never been available, the norm has always been 2 year, 5 year fix, and then try and get the best deal at that point in time, and then come off it. So Perenna come in and they offer this long-term fixed rate mortgage, and I guess if you were a customer looking at the benefits of a 2 or 5 year, is you I suppose are tracking the interest rates. So you do have the risk, but you also have the opportunity of the reward if the interest rates come down. So with a Perenna mortgage, then, if you fix and the rates drop, do you run that risk?
I think that's probably the biggest misconception that we have to tackle. So traditionally in the UK, the term of your initial fix, so a 2 year or a 5 year, the product will have an early redemption charge, so a penalty if you want to refinance that is the same as that fix. So if you take out a 2 year fixed rate mortgage or a 5 year fixed rate mortgage or a 10 year fixed rate mortgage from other lenders, the early repayment charge is exactly the same as that initial fix. So everyone assumed when Perenna launched, 30 year fixed rate mortgages, you'll be locked in for 30 years. We're in a high interest rate environment now relative to the last 15 years, not relative to the last 40 years. I think a lot of people, my dad keeps telling me about interest rates in the over 15% in the 90s on mortgages. But what's crucial is that our long-term fixed rate mortgages are flexible. So after 5 years, you can refinance at no penalty. So we've disconnected the length of the fix from the early repayment penalty period. Which is, again, it's a misconception, but I think the more that we speak to people about that flexibility of the product, the more people see it as, okay, wow, this is actually something really valuable because I can have my cake and eat it.
Yeah.
I can protect myself for 30 years, but in 5 years' time, if interest rates have come down, I could refinance again, and arguably you could do it with Perenna if you wanted. So take out then a 25-year fix at the lower rate and at no cost. And so it's almost like this insurance option that you're paying for.
So that would be the I guess for many people watching this, that would be the instant worry. Would be I tie myself into something and all of a sudden everything gets better. And I think that is possibly the reason why the UK have these 2 and 5 year mortgages, is because maybe as a nation, we're used to this. I'm going to chase the best deal, and I don't want to miss out. That's the other thing. I don't want to miss out, and I'm going to chase the best deal. But what we're saying is, if you took out the Perenna mortgage and you were 5 years in, and it got to that point where you were doing your, where you would normally be looking to refinance your mortgage anyway, what you're saying is, You could carry on as you are for the duration of the term or for another 5 years thereafter, but you could refix with Perenna again if the rates have come down and the more
Yeah, and I
competitive.
mean, to be clear, you could do this at any point. So 7 years, 8 years, 9 years. If interest rates just continue to creep up, then you're sitting happy and you're looking at your friends who took out a 2-year deal or a variable rate deal now, hoping that rates came down. So you could just not remortgage, but you could also do it before the 5 years. So the early repayment charges is staircase down. So it starts at 5% in the first year, then it goes down to 4%, 3%, 2%, 1% in year 4. So if, for example, interest rates did come down by say 2%, and you could get a Perenna mortgage rate with a 3 at the front instead of a 5 at the front, you might decide it's worth paying that penalty in year 4 of 1%, because the math works for you, and that you'll actually be better off by fixing it at that point. So you can do it whenever you want, but what's crucial is that after 5 years, any time you refinance after 5 years, you won't pay any charge, which is...
That's huge. And I guess there will be no doubt people watching this that would have started that thought process of, what if the rates come down, especially as we are now? So you're saying, there's the opportunity within that, so you could fix at a similar rate to what, because that's supposed the other thing. Is it because of this, with this safeguard, and actually Perenna's rates are actually far higher than everybody else's? Are you if you were to take out a 30-year fixed now, would I be getting a similar rate as I would be getting if I was taking out a 5-year fixed, or am I having a higher rate from Perenna because I'm getting the benefit?
So you're going to have a higher rate. There is a cost to this, I guess, insurance option. So at the moment, I think our products are priced between 5 and 6%, and the rest of the market is probably between 4.5% and 6%. So there's definitely cheaper short-term deals, like 2-year, 5-year fixes that you could take. And so you'd be saving yourself between 0.5 and 1%. So there is this value proposition. You have to think, yes, I'm paying more today, but this is what I'm getting from it. I'm getting protection for 30 years. I might never have to go through remortgaging again. How great is that? I will never worry that my remortgage date's coming up in 6 months. I've got to make sure, I don't lose my job. I don't, if you have more kids, they're going to reassess my finances. Will I be able to borrow the same amount that I could 3 years ago? I'm worried that I might get put on an SVR if my situations have changed. I'm worried that interest rates might have gone up. So you are paying more for it today, not significantly more, but there is a premium for this Perenna product, but there's all this added value that you're getting from it. And so I think that's what's really important to kind of focus on and it's what people do in other countries. Like if you look at the US, you're going to pay more for a 30-year fixed rate mortgage than for 5-year fixed rate mortgage in the US. I mean, interestingly, they don't actually allow them to be called fixed rate mortgages, the 5-year fixes in the US. They call them adjustable rate mortgages. Because they are adjustable. It's a 5-year teaser rate, and then 25 years after that of being on a variable rate at whatever the rates are at the time. So adjustable rate mortgage in the US is the terminology. But you pay more for that kind of protection for the long run. But if rates do come down, you get that opportunity to refinance at a lower rate when if rates have come down. If not, you're protected. So that's
and as you say, there's probably a lot of people out considering the way life is at the moment. I mean, there will be people that they chase every penny, and they will be very mindful of the opportunity to, if you were going through the journey now, maybe 2 or 5 years might feel a long time away, and I'll worry about it, but if you're somebody that's maybe at the start of that journey, looking at, right, okay, what's this going to mean to me for the next 20 or 30 years? Fixing at that point, assuming the affordability factor is there, fixing at that point and maybe paying a slightly higher premium, but knowing that you are safeguarded for the next 20 or 30 years from those fluctuations. Because those fluctuations, if we talk worst case scenario, those fluctuations could be the difference between whether you can afford to own that home or not.
Which is what we've seen in the last 2 years. Yeah. Like it's, people who took out 2-year fixes at 1.5% are kicking themselves that they didn't take out 5-year or 10-year fixes, because now they've refinanced and their rates, a lot of them had to refinance with a rate of above 5%. And if the Perenna product had been available 5 years ago, you could be on a 30-year fixed rate. It would have been in the twos, and you would have known that your mortgage rate was never going to be above 2% for 30 years. And going through since the Liz Truss budget, the kind of spike in interest rates, you would have been sat there very happily at the pub talking to your friend. Not that people want to talk a lot about mortgages, not the sexiest topic, but the reality is most people, will interact with a mortgage, and ultimately it's the biggest debt you take out.
Yeah.
It's a massive risk to think that of your monthly budget, your mortgage payment's probably the biggest thing coming out, and the risk that it could double is. It's huge. It's huge. Yeah. So that's what we're offering. Yeah.
It's a great way. You say maybe people don't necessarily talk about it down the pub, but what they would talk about, I think, is when those. I'll
talk about a good deal. Oh, yeah, I fixed it 1.5. I'm so happy.
Yeah. Yeah. And if they've also got a friend that's going through it at the same time and about to get that, I need their mortgage, and speak to this guy. I've just had mine done, and he got me this rate or whatever. In the moment, it's actually quite a massive deal. Yeah. And they say that massive deal comes around every kind of 2 or 5 years. And it's never an experience you hear everybody going, oh, my mortgage would change, my fixed term's about to come to an end, and I can't wait to start getting in, looking at these. It's never a topic that anybody enjoys getting into.
People dread that. Yeah.
And especially if it goes, if it's going, because you're either feeling stung in the meantime because you're on this rate and actually interest rates have come down. But as you say, for such a prolonged period of time, the interest rates have been so low that actually what we're feeling now is, oh God, what's it going to be when I refix? And I remember my dad telling me a story, and I can't remember it was when I was much younger, but there was a particular day, I'm going to say like Black Friday, I called it, or something like that. But there was a particular day where the interest rates went up something like 10 or 15 times or something in a day. And there was some big global impact thing going on. I don't remember the details, but he was sat there, and the Bank of England were bringing out new interest rates every hour or so. And he said he woke up in the morning and he said, we struggled to pay the mortgage in the morning. So by 12 o'clock, we could not afford to pay the mortgage. And it balanced out a little bit just after, but it was still remained ridiculously high. And that scenario could happen in the UK. And that might not necessarily affect somebody that's on a fixed rate right now. But if that period is ending, which is happening to a lot of people in the UK right now, that fixed rate term is coming to an end, and what's looming is these higher interest rates that are coming down the line. A Perenna customer right now would glide straight through that process and know what they were paying and not have to worry about it.
Exactly. Yeah. A stress-free mortgage.
Yeah, and I think people do it with cars. They do it with when they buy a car, they buy a car on finance knowing they're going to have hassle-free motoring for a period of time. And when you consider all the variables in the home, whether it's buying food and the cost of food going up, buying energy and the cost of energy going up, actually some security, whether it's from energy or from mortgages, probably two of the biggest outgoings that you're going to have. Some security there probably wouldn't go amiss. But how do we get from a long-term fixed rate mortgage to where's the link between that and sustainability? How do we bring that to the table?
It's a good question. So when I joined Perenna, the reason for doing so was it's a new startup with this mission to protect homeowners from this interest rate risk, which is on everyone who's on a shorter term deal, and I love that social impact side. But I am also really passionate about climate change mitigation and how do we decarbonize. And it was probably a couple years into my time at Perenna that I started thinking about, okay, well, what could we do as a mortgage lender to decarbonize? And ultimately, when we were looking at, okay, well, what are the emissions that the bank's going to have to report on ultimately when we get there? And that's just the kind of nerdy stuff that I was, even before we were a bank, I was still looking into what are we going to have to do in the future around kind of ESG reporting, sustainability reporting, that kind of thing. And I realized very quickly that the 95% of the emissions that we're going to report on are going to be the financed emissions from our mortgages. So all of the emissions that are coming from the houses that we've lent against.
Okay.
And that kind of started me on this journey of, okay, well, how can, we're a digital mortgage lender. I want us to be best in class in this. How could we, and if every bank's reporting on these emissions, how could Perenna show itself off as a differentiator and have the lowest carbon emissions, like intensity, than other in the UK. And that started this long journey, which is where, I mean, it's, I wouldn't say that we're there yet, obviously, but it's over the last 2 years, it's really been focused on, okay, how are banks currently reporting it? EPC ratings. How can we lower it? Okay, well, so we have to decarbonize the homes and retrofit. What does retrofit mean? I'd literally never heard of the term retrofit. I'd never heard of a heat pump. Like these were all brand new terms to me, but it became a focus of mine to think about what could we do to help our new customers when we get them to retrofit. And as I read more about it, I realized it's incredibly complicated. It's an incredible residential buildings is a really difficult sector to decarbonize. And there's a lot of conflicting advice out there. There's a lot of conflicting views. But ultimately what I thought was, as a mortgage lender, you're in such a unique position to actually affect change for a home. And we also have this vested interest to do it as well, because not only are we reporting the emissions on that home, but ultimately that customer's home is the security against the loan that we've given this homeowner. So it's in our interest for that home to have the highest value possible. And it's also in our interest for the homeowner to have the lowest energy bills possible as well, because that makes their finances more sustainable. Lower energy bills means they're less likely they're going to have more money in their wallet at the end of each month to pay off the mortgage. So it's okay. We think these properties are going to be higher value if we decarbonize them. Get them up the EPC rating ladder from G's to A's, and we saw that there's a lot of data out there to support the fact that a home that's higher energy efficiency will have higher value. We saw that it's lower credit risk for these customers because they have lower energy bills as well. And it just started clicking that what we can do is we can offer products, like it's in our interest as well as the customers to help them decarbonize. So that's kind of where it started on the journey. And then from there it became, well, if we all agree that mortgage lenders have this opportunity because they have this touch point with customers, like millions of customers take out a mortgage every year, and we agree that banks have this shared interest in the property, then what are other mortgage lenders doing around it? And so that's when I started looking at green mortgages, and it started to think about, well, what could Perenna do slightly differently in the green mortgage space?
And when you look at, because I suppose that's the thing. If you went to a broker today to look at a remortgage and you were presented with a green mortgage,
yeah.
Would I be right in saying that a green mortgage is essentially somebody lending against a house that is more energy efficient than a non-energy efficient house?
Yeah, exactly. So what I quickly came to realize was that nearly all green mortgages, and there are a few exceptions to this, but nearly all green mortgages are focused on homes that have not been decarbonized, but homes that are already energy efficient. So it's the lender recognizing the value of a home, which is EPC. It's normally done by EPC rating. So it's EPC A or B. And the lender will have a product that gives you a cashback or a lower rate because that home is more energy efficient. And that's great, because I think it does in some way incentivize people to choose to buy homes which are more energy efficient potentially, and that can create a demand push to drive value differences. But the problem with that is that it's kind of missing the bigger segment, which is, I think the stat is something like 80% of the homes that will be standing in 2050 in the UK have already been built. And we know that 98% of those need to have something done to them to bring them up to be ready for net zero. So if green mortgages are focused predominantly on homes that are already energy efficient, where are all the products to focus on retrofitting? And that's really, having looked at that, that's what kicked it off internally as, this is a big opportunity. This is what I would like Perenna to focus on. Talked about it with the team, with the founders, and they were really on board. And that when the Green Home Finance Accelerator competition came, it was really opportune timing. I think that it was 2020 2022 potentially that opened up, and I showed it to the team, and we said, okay, yeah, let's look at applying, and kind of use that as a springboard to start developing a new product that could focus on retrofitting.
Yeah, I mean, I suppose there's the starting point to that when you think of if all these lenders that are in the market currently are looking or are concerned that they're going to start to be monitored, for want of a better word, on how energy efficient their housing stock is that they're lending against. Because I suppose there's an argument to say that the lenders are the homeowners until that homeowner pays off that mortgage.
That's how the PCAF rules work. Yeah, essentially is
you own lots, and potentially if you own lots of inefficient homes, then if there was ever and I don't know, speculating what could come down the line, but you saw it a little bit with the energy suppliers. They had the energy company obligation where they were essentially told, go and make your home, for every X amount of carbon that you create by selling energy to these homes, you now need to start offsetting that in some way by making these homes more energy efficient. And I guess if you were a lender looking at what went on, in the energy supply market, where there was, I think it was, once you went over 250,000 customers, you ended up having to make these improvements to your homes. Then you might go, oh, okay, we need to do something.
And I think that's what was driving a lot of, because there is a big focus on this from all the other banks. It is all kicking off, and I think a lot of it was driven by companies. They set ambitious net zero goals. We want to get to zero carbon emissions by 2050. And I think when you then start reporting against the millions of tons of carbon that come from our homes each year, the question then becomes, well, how do you? We've set a commitment to zero. We've got this massive number in our mortgage portfolio. How do we bring that down to zero? So I think that's one of the benefits of companies and banks setting these net zero targets is I think that did trigger some difficult conversations. It's easy to say we're going to get to net zero by 2050, and I think a lot of banks probably did that without really thinking about how they
physically do that. In practice, and
I think there is a lot of reliance on we're waiting for government policies to drive this, and obviously we need to get the national grid down to like 0 grams of carbon intensity, and there's been a lot of progress on the national grid, but there's been less progress on government policies. So I think ultimately lenders and banks are going to have to step up and do more, be more innovative, push more propositions to try to incentivize retrofitting. And that's what I'm hoping when we launch our product, if it helps to start incentivizing customers to make changes to get them to make their home net zero ready, then I mean, the goal would be for this kind of, and I think we'll talk more about the product details later, but if it works and it helps, then hopefully it's a product that lots of other banks would try and utilize the same approach.
Let's talk about that product, because I think that is the unique difference with this. We've talked about the fact that you could go to Perenna and you could take out a long-term mortgage for, it's 15 to 40 years is the term. So you could go to Perenna, you take out this mortgage for 15 to 40 years, and you're paying a slight premium on the rate for the security that you get over that lifetime. And that's just to be clear on that slight increase in the rate. That's over and above what you could possibly get as a fixed rate mortgage right now at that point in time. So you're taking a bit more out there and you're fixing it for that term. But then the sustainable angle to this is if I buy that house and then I decide that I'm going to put solar panels on the roof, and I come to Perenna and say, I have now put solar panels on my roof. My house now is more sustainable. The house that you're essentially, lending against, so it's as much, in your benefit as Perenna is the customers. The customer's going to get lower fuel bills, so they're going to have more money in their pocket. They're going to be lower risk. But they've had these solar panels on my roof. What happens then? I come to you and I tell you I've had these solar panels put on. What's the incentive there for the customer?
Yeah, so I think I'd rewind it slightly back to that point where you're picking the Perenna product. So you will be told up front when you pick the Perenna retrofit mortgage, name still be to be determined. But essentially, when you're talking to your broker, if they're recommending, a long-term fixed rate mortgage product, and you're taking out, 60% LTV product with us, and the rate is say 5%, the broker will have two options will pop up for the Perenna 30-year 60% LTV mortgage, and one of them will be this retrofit mortgage, and the broker will explain to the homeowner, if you make qualifying changes to your home to make it more energy efficient, Perenna's going to reward you by lowering that mortgage rate. So if you start at 5%, once we've verified that the retrofit has happened, we'll reduce that rate down to 4.8%. So it'll be a 20 basis point discount on your mortgage rate as a reward for making your home more energy efficient and getting it ready for net zero. It depends on the size of the mortgage that you've taken out with us. But if it's, a 200 or 200,000 pound mortgage, that's going to make a sizable reduction in your monthly payments. And that's just for the mortgage payment reduction. Obviously, you're also hoping that you're getting lower energy bills by the fact that you've put solar panels on. Yeah. I think the other thing to add here is that at that point you're having the conversation with your broker and you're saying, okay, I'm just coming off my 5-year fix with another bank. I want to remortgage. This product has come up in front of in this conversation with the broker, and you said, oh well, how much are solar panels and a battery going to set me back? Oh, about 10 grand. Could I add that to my mortgage? Yeah, absolutely. Like, instead of applying for £200,000 to pay off your old mortgage, you apply for £210,000. So now you've got this concept of you're also removing the upfront costs as a barrier. So it's not just, okay, we're going to reward you with a lower rate. It's also, we're going to help you finance this retrofit. And £10,000 on a 30-year mortgage is, depending on the interest rate, obviously, but at the moment it would be about £60 a month.
Wow.
To pay for your 10 grand installation, and
You'd
60 grand.
That loan.
I think that's quite a unique selling point. Using a mortgage and using the debt that's secured against your home, you can do a lot of things with. It's always going to be the cheapest. It's always going to be the cheapest rate you get is a mortgage.
And just in practical terms, when you mentioned there about the 60%, the loan to value of 60%, is that fairly typical for a Perenna customer? 60% loan. So if I came to you, I would need to have that 40% equity in the property,
We've seen a huge range, to be honest. I think I probably skipped out a section at the beginning about where Perenna is. So we went live in November. We got our full banking license in October. So we're seeing all these new cases coming in over the last few months. But so far we've seen a range of purchase and remortgage products, and kind of across the LTV spectrum. So it's hard to say that there's kind of a typical Perenna customer.
There's not a limit, I suppose. That's my question. I'm just thinking, is there a?
Oh yeah, so we go up to 95% LTV.
Really? So, because I just thinking, I remember when I first bought my first house, and you are at that stage when you're buying your first house, you're considering all the factors around, you're going to be in this home. You want to probably be thinking of 5 years ahead, you're going to be in this home. And so you're considering what your life will be in 5 years' time, whether you're kids, a dog, everything, the space that you need for that. So I guess it's not uncommon that people maybe push themselves a little bit, so that kind of loan to value of 95% is an important one. So but at that point, if you did that, you may not have the equity within the home, I guess, to release. Yeah.
So if you're already really stretched and you've only got 5% deposit, so you need to borrow 95%, then you can't borrow any more to do this. But I think there's probably a lot of homeowners out there who've been paying down their mortgage over the years, building up equity in their home. Absolutely. Maybe they're down to 30-40% LTV. Adding amounts to your mortgage when you remortgage is a pretty standard thing for people to do. A lot of people use that remortgage date as a trigger point to make upgrades to their home. And
that's
typically it's been, upgrade your kitchen or loft conversion, all these things, which cost good amounts of money, 10, 20 grand. And I think what we're hoping is that by by having this product, which literally says retrofit in the title, it will spark that conversation with the broker, between the homeowner and the broker when they're talking about this mortgage, to say, okay, well, I was thinking about adding money to my mortgage anyway at this remortgage date. I've built up equity in the home. I'm comfortable that I'm not taking on a lot of extra risk, but because I wanted to upgrade my kitchen or something, or I want a new car, or I want to go on some nice holidays. People borrow more against their home all the time to do different things. And what I'm hoping is that we can add retrofitting, we can add heat pumps, solar panels, battery as an option in that, for people to think about. Because I think a lot of people just don't think about this, right? So we're trying to prompt it. There's other priorities. Yeah.
I think that's a really cool way of doing it, though. If you think, I suppose my question around the kind of 95% loan to value was more that just because they don't lend the money off Perenna doesn't mean. So if they went out and got a loan from a high street bank, or put a solar panel installation or a heat pump installation, whatever it might be, on a credit card, then they still can benefit from the reduction.
By no means does the retrofit discount get applied only if you have added more to your Perenna mortgage. This is for Perenna. This is not we're trying to increase our loan size kind of commercial discussion. This is a we want to reward homeowners for making these tough, sustainable choices, because it's good for them and it's good for us. And if you have 10,000 in cash, that's great. Most people don't. If you want to take out a 5-year unsecured personal loan at 10% interest rate, you can do that. If you want to use an energy as a service model, and get one done, and get a retrofit done in that way, absolutely. The moment that we've verified that upgrade has happened, we're going to give you the lower mortgage rate as a result. But we're also saying if all those other finance options aren't as attractive, and you really want to focus on minimizing that monthly payment, bringing down that solar panel and battery installation to £60 a month, offset against your energy bill savings potentially of even more than £60 a month. So you may just be better off each month on that basis. That's an option for you, and have that conversation with your broker about adding 10,000 to your mortgage.
What a great way to do it as well, isn't it? It was interesting before last night. I was having a conversation with a couple that. So that they're getting to this point of remortgage.
Hopefully you told them about Perenna.
Well, this is absolutely. So the conversation went down this route, and so where they were at was they've been in the home for maybe 10 years. So they've built up some of that equity in the home, and the conversation was one part of the couple was very looking at using the £10,000 that they have as savings to redo the kitchen, and this is something they've saved up for quite a long period of time. The other part of the couple has more recently, with energy bills going up and what have you, this is pushing for solar panels and a battery. So now they've got this £10,000, and they're essentially both fighting over this where they put this money. And the argument is that the kitchen would add value to the property, and maybe the solar panels don't add value to the property, but they also improve. They do reduce the running costs, which will certainly help them out in terms of affordability. And that was the point that I kind of said to them. Well, what if you were to do a remortgage with somebody like Perenna? You can actually lend against that mortgage, and then split the difference. Take £5,000 from your savings, and take £10,000. Say take £10,000 from your savings plus £10,000 from a remortgage, and actually get both pieces of work done. One is more cosmetic, but it's a nice to have, and the other one is obviously going to be improving the efficiency of the home. But both add value, and ultimately, once they've made that improvement, they're going to get the lower rate on the mortgage for the duration of the term. They're like, well, this makes complete sense. Why would you not do that? And then when I said this was a relatively new offering that's coming to the market, they're like, the actual ability to lend against your home to have this work done is not necessarily is not new.
No.
If you've got that ability to do it, and say people lend against it to do other things. It's just that not many people are doing it for the benefit of for the purpose of putting sustainability technologies in the home. But the unique part from Perenna perspective is this fact that once you've done it, you get this reward.
Yeah.
Because the other mortgages that are out there, green or otherwise, whether you if you live in an A-rated home, you get a cash back, but you're still paying the same fixed rate and everything else.
I think sometimes I get told off for describing what we're doing as being innovative, because the reality is that it's not this. People, hundreds of thousands of people do these kind of things every year. There's just two differences that Perenna's adding to it. Is, we're giving you this protection from interest rate risk for up to 30 years. We're not going to force you to remortgage in 2 years or 5 years. And with the retrofit product, we're going to reward you if you borrow 20. If you decide to do a retrofit, we're going to reward you for that. And that's the difference. But yeah, to your point, people have been doing this for decades using the equity.
That reward, though,
they haven't been doing that reward. Yeah. So that's the difference. And that's hopefully going to be, I guess, the innovative additional factor to this mortgage that will incentivize more people to do this, because it's this carrot sitting there at the end. It's not just weighing up the cost of the installation, the additional monthly payments versus my energy bill savings. It's also this reward of being on a lower mortgage rate. So
especially, I think that we touched on it just before the show, but this point around where you have the people who value the homes, when they start recognizing the value of the technology in the homes, it's kind of like we're seeing the trend that the consumers recognize the fact that if there's solar panels on the roof, the house is going to cost them less. So they're more likely to buy that house than the house next door if they were both up for a similar price. But are we seeing, we're not necessarily seeing at the point of valuation the recognition at the moment of those technology differences?
No, not necessarily. I think that sits with RICS and their Red Book. And I think they're being very they're cautious not to lead the market in a certain direction. They don't want to tell their surveyors to value a home higher because it's got renewable technologies until they're 100% sure that home buyers in the market are valuing it higher, like with their purchase decisions. But I think logically, it makes sense that two homes that are sat next to each other that are identical in every other way, except one has solar panel, battery, and a heat pump and is running at £50 a month, versus the one next door has none of those technologies and is running at £200 a month heating bills. Logically, a homeowner would value the original one more. And that's certainly what we're expecting to see in the next 10, 15, 20 years, is that there will be more of a discount against homes that aren't energy efficient, because people will realize, there is going to be policy changes coming in that will, we've seen it a little bit with buy-to-let properties. So, the minimum EPC ratings, at some point every home is going to need to be upgraded, and there's going to be a cost to that. So if I'm buying a home now that I want to live in for a while, or if I'm worried about selling it in 5-10 years, the next person who buys that home may say, okay, I know that I've got to spend 10 grand upgrading it, getting off my gas boiler, switching to electric heating. Yeah. So, we see this brown discount coming in the future. And that's one of the reasons, again, why we are incentivized as a bank to help homeowners to upgrade their homes, because if in the worst case scenario a homeowner defaults and ultimately we have to sell that property, that it's the value of that asset, and we think it will sell for more in the future because it's been decarbonized and it's net zero ready, because it doesn't have to have all these expensive upgrades added to them.
Key, isn't it?
So that we're factoring that in, and again, it's one of the reasons why we're able to offer this discount, is because there's these incentives for us as well as the homeowner to do it.
And I guess you mentioned about the RICS book and the value is going out, but I guess that eventually consumers will lead on that. If a customer or somebody's buying a house and they walk in and they can see that this, especially with the way energy prices are and can continue to be, if we see the customer people when they're buying a home are looking at it and saying, I know this is going to cost me 2-3 times more than the house next door, or just that this one's going to be very expensive to run. I guess they will make that decision with their feet. They will not buy.
And you hear this all the time, that especially, we've gone through this kind of massive cost of living crisis over the last few years, which is still ongoing. I think the fact that inflation looks good, but in terms of like the percentage increase, but energy bills are still double what they were before. Mortgage rates are double, if not triple what they were before. We're now just in this prolonged period of higher living costs. And I think a lot of people were really impacted by this massive spike in both energy bills and mortgage rates. And a lot of people are like, they value that. They want that peace of mind that that's not going to happen to them again.
Yeah.
And it comes down to both mortgage rates and energy bills. And so people, I think, will choose a home knowing that it's going to have minimal energy costs relative to another. And so they know that they're not going to be as impacted. Like if your energy usage is that much lower, you are so much better protected from rise. Like, if there's another war that causes another massive spike in gas prices, knowing that you're protected from that because your home uses a third or a quarter of the amount of energy that the other one does, people are going. We know from conversations that people will value that, and that's kind of the Perenna. That's what hopefully this product will offer, is protection from both energy bill rises and mortgage rate rises. It's this, it's a sustainable mortgage product to help you with sustainable home finances.
Yeah, and we've got some really good topics to cover on that one in the next show. In the next episode, we're going to be talking a little bit around the zero bills mortgage with Octopus Energy, and also the Green Homes Finance Accelerator project that Hitio and Perenna are working on with Energy Systems Catapult. So we'll probably wrap it up there for this episode. So thank you very much for your time, Mike. And
thanks for having me.
Join us again for the next episode, where we'll be talking about other ways in which green mortgages and energy can come together to reduce people's energy bills.